Hey, it's Rav. Welcome to Real Investments, the hottest real estate investment show in the world. That's right, I said it. I don't care who knows it. Today we're going to be talking about one of the most important aspects when it comes to investing in real estate, and that is the money. Where do you get money to make the money? Where do you get the money to get that return on investment? And so there's nobody in the world that I'd rather talk to than my good friend Carmen Campagnaro. She's the guru of finance. She's the guru of mortgages when it comes to lending, borrowing, RRSPs, cash, all that kind of stuff, whether it's development, whether it's on individual investments. Carmen is here on the show. Carmen, it's great to have you.
Thank you very much.
Thanks for being with me today. It's always great to be graced with your presence, not just because you're a beautiful face to look at, but also much wisdom, knowledge. I know, but sincerely, you've been doing this for 20 plus years.
Yes.
And you started a long time ago with your first property. I think it was a triplex. What was it?
No, I was a single family home at 18.
At 18 years old, a single family home.
Yes.
And within a year, you profited.
It was over $100,000.
Yeah, over $100,000, and that wasn't by mistake. No. And people are wondering, where did you start, and so on and so forth. You had, friends, family to help to start this investment. Yeah. Like we need to. We just put a fancy, sexy word to it called joint venturing. Yeah. But really, it's just kind of a couple of partners that were in on the deal. And so here we are, a couple decades later, and you are still in that world of real estate, money, mortgages, all that kind of stuff. Obviously, it's worked well for you. Why not just go down the path of doing it for yourself, but you still do it for yourself, but you also help other people do it? So what kind of, as having one of the top mortgage brokerages in the country, what made you go down that road as opposed to just being an investor and keeping it on your own? Well,
I actually got into the business. It was a friend of mine, an associate, that said to me, Carmen, I think you'd be wonderful in this business. You should really get into it. So I did. And what happened was it was a fluke, and it was probably a blessing. It landed in my lap, and it was an opportunity to service real estate investors. So that's how it all kind of started. Yeah. And I've been servicing real estate investors now for 20 years. And we would speak at events and train investors how to finance their properties properly. And then as time went on, we opened up an arm for private money, and that assisted investors even further to purchase what they needed to because banks were tightening up. So that's how I actually got into it. But along the way, I've bought and sold and flipped and built, and I've done almost every aspect of real estate you can imagine. So when I am financing investors' requirements for their deals, I really know from the investor side how they need it to be structured, and also then from the bank's perspective or the lender's perspective. So it prepares a really great package for these people. Yeah, and I think that's important. That's really what I want to cover through our show. Is I want to go through the whole process from an investor standpoint. And we're talking, you own commercial buildings, residential, you're in development, you're doing all this kind of stuff. It takes money. And so, where I'm just a pure investor, I come to you and say, okay, Carmen, how can I get the funds? If I need $100,000, where can I get it from? Do I take it from a house? Do I take it through another investment? To be able to make returns of 12, 13, 14, yes, 30% annualized, depending on what I'm doing. Yeah, there's great upside. More, right? Yeah, there's absolutely amazing upside with private lending. And many people say, well, why on earth, if the interest rates today are so low, why would anyone pay 10, 11, 12, 14, 15, 16% on the money? Well, because the rates that are at 2.25% or 2.5% are only for people that fit into this perfect square little box. Yeah. And as of May 1, there's another new rule that's coming out, and it's further restricting banks to lending to people that are self-employed and making it even tighter. So it's opening up a larger door for private lenders. And just because rates at the institutional level are at 2.25, 2.5 for 5-year fixed, you're still getting 10, 11, 12 returns with private lending. So what we've done is we've put together a really great package where we bring great people that need to borrow the money and great people that need to put out their money, and combine the two, and people are, both parties are happy and people are making great returns. So I thought it would be a really great discussion today to speak about the process of how, now that you've decided, Rav, that you want to put your money into a mortgage investment, how do you do it? Yeah. And that's the number one question I get. Okay, I'm ready. I like the idea. It's secured on real estate. I love the idea.
How do we do it?
Yeah, no, I think it's great. Let's do that. You mentioned institutional investor.
Yeah.
Sorry, the institutions rather.
Yes.
So we're talking about the banks.
Yeah.
We're talking about the Schedule A banks, the top, 5, 6 banks. They're not going to help me put my money in mortgages as an investor.
No, not at all.
And so really quickly before we go to break here, bank versus what you are, a mortgage specialist. Is that the right terminology? A mortgage planner, a mortgage?
Yeah, we're a mortgage brokerage. We're a boutique. ProFunds Mortgages is a boutique industry. We're also a mortgage administrator.
Yeah.
Our affiliate company is. So we can service a lot of needs for investors. So yeah, we're a mortgage brokerage that caters to the investor.
Yeah.
That's
no,
what
no,
we are.
and again, if somebody's working at the bank, they'll say, well, we do that too. It's not the same because I have an individual that I build a relationship with. At the bank, I don't know how long and where they're getting moved around to and so on and so forth. And if that one bank says no, Carmen has 50, 60 different people that we can talk to.
And there's always private money to back it up as a backup plan.
Wonderful.
So
We're talking to my good friend Carmen Campagnaro. We're talking about the world of finance, how to make money using our own money. You don't want to go anywhere. It's going to be a great show. Thanks for watching, everyone. Whenever you're considering to invest in real estate, always ask the 4 questions to start. Number 1, what is the return on my investment? Number 2, when do I get that return along with the money I put in? Number 3, what's the minimum cash amount needed? And number 4, what is the risk, the worst case scenario? Hey, it's Rav. You're watching Real Investments. Today we're talking about how to make money using your own money. As a prudent real estate investor, that's one of the things that's one of the roadblocks that we always face is that we run out of money, we don't know how to leverage money, we can only do a few properties, and we want to be able to do more because we've mastered the skill of being able to make money in real estate. And so if we could just get access to more of it, what could we do with it? There's other times where you don't want to do any work, you just want a passive investment. And that's where the mortgage investing really comes in, because I can lend money out and get a healthy return on that. And Carmen Campagnaro is here to really teach us, to explain exactly what that means. Carmen is the president and CEO of one of the premier boutique mortgage brokerages in the nation. Carmen, you've been doing this for a long time. It's great to have you on the show. Let's really, we talked about, let's do an interesting show this time. Not that they're not interesting, but we'll really kind of talk about process and kind of real life scenario. So let's really just kind of jump in.
Sure.
And there's so much we can do with money. You can help me acquire money from different sources, and you can help me do different things with it. But let's start off by saying Rav wants to be incredibly passive, meaning I just want to write a check and let the money just work for me and be able to get a great return on my investment. So
Sure.
You've taught me that there's a couple of ways to do that, obviously even more than that, but one, I can lend my money to an individual.
Yes.
Or I can lend my money with other people, so we pool our monies together, and I lend it to a builder or a developer or maybe a bigger scale type opportunity. So let's start with the individual.
Okay, so yeah, and that would be, with our company, we have several real estate investors that are looking for financing, and as I mentioned earlier, the banks have tightened up, so they're not having access to funding there. So for example, if there's a property that they're looking to buy that maybe is vacant, or they're self-employed and their numbers do not fit into the bank's criteria, they'll say, okay, ProFunds, can you guys get us a new first mortgage? And we service all of Canada, so there's mortgages out west, out east, Ontario, even in Quebec. And so what we do then is we will put together a very detailed package. So the deal will come to our company. We will pull credit bureaus. We will do our due diligence on the deal in its entirety, appraisals. We can't guarantee everything, but I want to do my very best to protect the people that are getting involved in investing in mortgages with making a right decision in the right place.
So really, I mean, of course you can't guarantee, because you're the liaison between two investors.
Right.
So there's Rav, the investor, who wants to lend out his money and get a return on that investment. There's Bob, the investor, who wants to borrow money from
Correct.
somebody
Yeah.
and take that money, pay interest on it,
Yes.
but put it somewhere in real estate that they already know beforehand that they're going to make even more money. So,
Correct.
for example, to make numbers easy, I know they're a lot higher, but if Rav receives 10%, so can we use $100,000?
Sure.
So Rav has $100,000, and then you're going to walk me through the process. Rav has $100,000. I say, Carmen, here's $100,000. What can I expect to be my return on investment?
Right. So what I would say is, on average, we're seeing anywhere between, let's say, 11 and 14% for individual mortgages.
Okay.
Okay. Now, individual mortgages are between yourself and Bob.
Yeah.
Bob provides me with all the details and appraisal, and we often require our own reports so that we know it's a real value.
Yeah.
We want confirmation of his income and everything like this. Now, income and credit is not critical for the approval like it is with a bank. However, it builds a case, and I want to deliver the full information to my clients.
To Rav. Yeah.
So Rav can make an informed decision and say, you know what? Okay, I'm going to lend this guy a first mortgage. It's going to be 75% of the value of the property. So I've got lots of equity in there if his credit is not so great, but...
So 75%. So let's say this property is $400,000. We want to make sure that he has $100,000. He's got 25% of it in there.
Yes.
So we want to make sure that there's equity there. Rav wants to make sure, Carmen shows me that Bob has this. Just in case there's a rainy day, I can now, just like the bank,
Yes.
power of sale this.
There is a process, a very detailed process in that.
Yeah.
And but that's the beautiful part of private lending. You actually have security, registered title on the property.
Yeah.
So if anything does, God forbid, happen, you're secured on the real estate. So there's a sale process, and that's a discussion we can have when we go towards the end of the process, and then you can understand that part of it as well.
Okay.
So the first part is this. You're going to approve the deal. I approve it first, or my team.
Yep.
Once that is approved, then we have a list of all of our investors that are interested in investing in individual mortgages, and we'll send it out. They go really quickly, so if you say you want it and it's already gone, please don't get frustrated with us.
Well, listen, you just said to me 11 to 15%. Let's just use 12 as an easy number. I can make 12% on my money doing nothing. I can see why they go quickly.
Yeah.
So Rav is going to lend money to Bob.
Bob.
I
Yes.
would never have met Bob. And by the way, Bob's an investor.
Yes.
Rav, the investor, is going to lend money to Bob, the investor.
Yes.
Rav would never have met Bob without Carmen.
That's right.
Carmen is the access point. She's the liaison that helps connect Rav and Bob.
Yeah.
Because both are her clients.
Yes.
And so I'm saying I'm comfortable to lend $100,000 cash
To Bob.
and we're going to call it a 12% return.
Right.
So I'm going to, even though I know it's probably more with other fees that I get, which we can talk about in a second.
Yeah.
So I'm going to get $12,000 on this 100. When do I get that? How long is a term?
So this is how it works. I will send out the deal, and you'll say, Carmen, I'll do this deal, or Jordan, or whomever's working on the file in the office.
Yep.
What will happen then is she allocates the funds to you, so then we draft the paperwork. So the process is this. We will also provide you with the terms of the mortgage. So we'll say, okay, Rav, Bob's willing to pay 10% interest monthly.
Yeah.
And it's interest-only payments, so they never pay any of the principal. So at the end of the term, which is typically a one-year term,
yeah,
he will repay the mortgage amount, and we will determine the exit strategy in advance. So that's part of our
So can I go through that numbers for a second? So I give him $100,000.
Mm-hmm.
He's going to pay me 10%, which is $10,000 monthly, which is about $800 and change a month.
Right.
So I'm giving him $100,000. I'm going to get about $800 and change.
About $1,000 a month, actually. Oh no, 10%.
10% of $100,000. Yeah, 10. So $800. I'm going to get that monthly.
Yes.
At the end of the year, I'm going to then get my $100,000 back.
Yes, and plus.
Plus.
The lender.
I like that word.
Yes, plus.
Yes.
What happens is you will get something called a lender fee.
A lender fee, okay.
And now that doesn't mean you pay a fee. It means you get a fee on
I get
closing.
a fee that Bob's paying.
Bob pays you.
Yep.
Typically 2%. Pays Pro Funds 2%. Pays your legal fees.
Wait a minute. Hold on for a second.
Yeah, this is great.
No. So 2% of 100,000?
Yes.
So I'm getting another. We're going to add 2% to my whatever. If it was 12%, I'm really making 14%.
Yeah, and if it's 10 and 2, now you've made 12% on a first mortgage.
Yeah, we're going back to 10. Yeah.
That's a typical return you're seeing on first mortgage rates for us.
Got it. Okay.
Mm-hmm.
So I lend out $100,000.
Yes.
It's a 10% yield for me. At the end, an extra 2%. So
At
the
the
whole
beginning.
thing. Oh, I get that 2% in the beginning.
Yes. So,
cash.
Yes, this is individual. So individuals between you and Bob, With individual mortgages, you usually get your lender fees in advance.
Wow.
On the day of closing.
Wow.
The lawyer then, so essentially you can take your $100,000 less $2,000, which is your lender fee, and just advance that to the lawyer.
Yeah, okay, but technically, I mean, in a sense, Carmen introduces Rav to Bob. Rav inspects Bob.
Yes.
Like what I see.
Yep.
I give him $100,000.
Yep.
He's going to give me a return of 10% plus a 2% lender fee.
Correct.
And he's going to pay my legal fees because I'm registering a security on his deed, on his title.
Correct. So the process is this. I will draft paperwork. It'll outline all the terms. So we have a commitment. We have something called an investor disclosure that you will sign. The client then signs the commitment.
What's that, investor disclosure?
We're regulated by Financial Services Commission, so all of our documents have to be exact.
Okay.
So
that Rav understands, Carmen's just
it's a
showed
disclosure
everything.
showing you the rates and everything else. You'll get a commitment which outlines the terms. We prepare that. That then goes to your lawyer, or a lawyer if you want us to recommend one. We will send the information there.
Yeah.
That lawyer then will contact the lawyer for the person borrowing the money, and they will then gather all the information required to make sure your security is in place. He registers a charge. The client then gives the lawyer 12 post-dated checks.
Yeah.
You get to cash your check every month, and then on top of it, you get your lender fee on closing.
And this can be this is usually a 1-year term.
Usually 1-year term.
Okay, so again for numbers, I give out 100. I'm getting back $2,000 off the top because that's 2%. That's the lender fee. I'm getting another $10,000, 10% of the 100. So I'm basically making $12,000 on my 100.
Correct.
At the end of the year, I get my 100 back. Or I say, Carmen, I really like this. Can we do it again with Bob if Bob still needs it, or can we do it somewhere else?
Yeah, so what we do is 3 months prior to the maturity of the mortgage, we will send out renewal notices to you, the lender, and the person that borrowed the money. And you will agree to renew for another fee of maybe 1%, 0.5%, 2%, depending on what you're looking for. And if everybody agrees, we redraft all the paperwork and we go for another year, you get 12 post-dated checks. So it works like that. Now we have multiple deals. There's private second mortgages as well that you're getting around 14% on your money.
And a second mortgage, the reason why it's higher is because somebody like a bank probably has the first mortgage. Bob wants money for whatever reason, doesn't want to disturb the first mortgage.
And that's usually the reason, because he can't get out of it for whatever reason.
Can't get out of it, or he's got a good rate, doesn't want to break it, whatever the case is.
Exactly.
So he needs an extra $50,000. So then Rav gives him $50,000 because there's still equity in the property. I know that if it's a rainy day, I can still go get that. So there's equity in the property. I give Bob $50,000. Still a lawyer's involved because we're going to register as a second mortgage.
Correct. There's always a lawyer registering the deal.
Okay.
So everything always goes to a law firm, which then searches the title of the property to make sure everything's there. There's no liens, no issues. And then the property has clear title. He'll register a charge on the property. So if you do a search on the title, you'll see whomever is lending the money is registered on title. So nothing can happen if they want to sell or they want to refinance or take more money out. You always have to be paid out first.
And the due diligence on my end really is to look at Bob, look at the credentials, but for me, most importantly, to make sure there's enough equity in the property, whatever the loan to value, whatever that leverage is there, to make sure there's enough there that if something were to happen, okay, we're gonna the first position and second position, first mortgage, second mortgage. If we had to, rarely happens, let's sell the property and recoup our money, no loss.
That's right. Now, our company really, we haven't lost any money. And it's about, there have been defaults, so I can't say 100% there haven't been, but for all the funding that we put out, we had maybe 1 or 2 last year. And there's always been a solution to assist in the matter. So no, we haven't lost any money, just so people are clear, like, oh my gosh.
The plan doesn't, it doesn't go according to plan a couple of times, but the investor never lost money.
That's right.
Well, that's okay. I mean,
no, it's great.
Listen.
I mean, it's a lot more work for us. However, that's why we're so careful about what we get into, because I know what's involved if something does happen. So we're very cautious. So even if you get into a second mortgage, it's not like, oh my gosh, it's complete risk, I'm going to lose my money. No, 85% loan to value, depending where the location of the property is, what type of property it is. All of these sort of things make a difference on your decision with moving forward on an investment.
Well, we're going to go to a break here, but when we come back, let's talk about Bob. Why would Bob borrow $100,000 and pay $4,000 $14,000 on that 100. Me and you know the answers. I want the viewers at home to understand it's actually in Bob's best interest to be able to do this. This is a win-win situation for everyone. When we come back from the break, well, let's talk about Bob for a second.
Yeah.
Well, you're watching Real Investments. We're talking to my good friend Carmen Campagnaro to teach us how to make money lending money, how to make money borrowing money. You don't want to miss this. We'll return in just a few minutes. Thanks for watching, everyone. Did you know that mortgage investments are fixed returns that form part of the registration on title, and they are always registered through a lawyer? The borrower cannot sell or further finance in advance of you without your consent. Hey, it's Rav. Welcome back to Real Investments. We're talking about how to make money using your own money, lending out money, borrowing money, how to get a great return on your investment. My good friend Carmen Campagnaro is here to teach us how to do all that. Carmen, before the break, we were talking about how your job really is to marry two parties together. Investor and borrower, even though both could be investors. And in your world, as you are an investor, you borrow money, you lend money. So we use the scenario of Rav the investor was lending out $100,000 to Bob the investor. And what Rav would get in return would be a 10% return on investment plus a 2% lender fee that goes to me paid by Bob. As well as a bonus, Bob also takes care of any legal fees as we register this lien on title, so on and so forth. So I was going to make $2,000 up front, the 2% lender fee, and I was going to make $10,000 paid monthly, $800 and change a month. At the end of the year, I was going to get back my $100,000. So for you that are watching at home, I always say the first question to ask is, what's the return on investment? In this scenario, it would be 12% total. When do I get that? When do I get that $12,000? I get $2,000 up front. I get $10,000 over the duration of a year. And then, of course, I get my principal back, the $100,000, at the end of the year. What is the minimum to be able to get involved? Well, in this case, it's $100,000, but you've done deals, Carmen, as low as $25,000, so on and so forth. I love it. It's wonderful. It's magic. I do a little signature stuff there, and it's purely passive income. And the way that Carmen gets paid is Bob as well is paying Carmen.
So it doesn't cost you anything.
That's right.
You as an investor.
It costs me nothing. I'm not paying legals. I'm not paying, even though I gladly would. I'm not paying Carmen who put this together for me, all that kind of stuff. So then the question was before the break is, why would Bob, the investor, the savvy investor, the prudent investor, why would Bob or Carmen, because she does this all the time?
I borrow more money privately than I do institutionally.
Yeah, why would they do that? Why would you guys borrow $100,000 from Rav and pay $14,000 plus another grand or so? Let's call it 15 grand total. Why would you pay 15 grand on the 100? It doesn't make sense, but then it does make sense, and you're going to show me how.
Absolutely.
So let's say we're lending the money to Bob/Carmen. What are you going to do with that money?
Well, let's just say, for example, we purchased a triplex for $300,000.
Okay. So we're going to buy a triplex. That simply means one furnace and 3 units.
Correct.
So one dwelling, one roof, one furnace with 3 different apartments.
Yeah, and this is probably in London or Kitchener or somewhere because the price is lower. I was going to say $300,000. Where are you going to get a triplex for that?
Yeah, Oshawa. I mean, we have
There's
friends.
There's many places there.
Okay.
So $300,000.
So our purchase price is $300K, and I'm an investor, right?
Yes, and this triplex really needs work. So the intention is to go in, and this is such a good example of I'd say a good portion of the funding that we do for people, for investors, is this type of thing.
Okay.
It's a prime example.
So it's not tenanted. It's
vacant.
It's a vacant because it's such a mess. Nobody wants to touch it.
Exactly.
So you as an investor, you and Bob would have to put down, unless things have changed, 20% to be able to buy this.
Correct.
So
today it is 80% max with banks. So 20% down would be your down payment.
Okay. So the down payment. So out of pocket, you guys, down payment is going to be 20% of that, which is $60K.
Yep.
Okay, so now you bought this property, you've got $60,000 in it, which is 20% in the property. Okay, now you want to fix it, you have no money.
Right, and the banks will not give you any more. Okay,
and then why? Because the banks won't give you any more because
it's above 80%.
That's right, it's above 80%, and furthermore, even if they could, there's nobody in it, there's no income, there's no rent.
Yeah, it's a real tough deal.
Okay.
Now, this would have to qualify on someone's income individually with a bank anyway.
Okay.
If, for example, the investor does not have income to confirm, chances are they're not going to get an approval with a bank. So we could do the $60,000, the 80% loan to value with private money. As well. However, in this scenario, we're going to say that there's a first mortgage in.
So the bank's giving us $240,000 mortgage.
And we're going to get a private mortgage in second position.
Okay.
So it's a second mortgage. That means there's a first of 240 and R100.
So like normal, just I'm buying a residential for myself. Just say I put down because I want to. I don't want to pay any CMHC fees.
That's right.
I put down $60K. The bank gives me the remainder, which is $240,000. Everything's great, but I have a problem because this isn't for principal use. I want to rent this out for 3 different tenants, but nobody would dare move in there. I wouldn't even move in there. No. So what do I do?
So we're going to renovate. You need $100,000. So you've provided our company with a plan of what you're doing. We're going to get an appraisal done on the property as it sits today, and when you've done all the renovations.
Bob did.
Yeah, Bob.
So Bob came to Carmen and says, "Here's my plan. Here's what I'm going to do." Yeah. It's a no-brainer.
Yep. So then he'll say, I need $100,000, and when I'm done, the appraiser told me it's worth $500. So he's going to invest $100,000 in renos.
Okay. So my investment amount is $100,000.
Yep.
Okay. So that's Bob's. No, that's Rav's. Yeah, that's Rav's investment amount. So Rav is coming in. Bob already took his own cash, put down a down payment. Now he wants $100,000 to fix that bad boy up.
Yep.
So Rav is going to lend him $100,000, and we already discussed that Bob is going to pay
14%.
14% total, which is $14,000, and let's just add another for the legals.
Oh
right?
yeah,
he's going to pay. He's going to do legals, and he's going to pay Carmen. So just say it was $16K.
Yep.
Okay, so let's just say he's going to pay. So it's going to be $16K interest, and that's where. Most people,
costs, right?
Cost. Sorry, cost. It's going to cost him. But the reason why I don't use cost so much is because when there is such a significant return on investment, we never look at the cost because. But yeah, let's just go there. So that's why I said to you, who in their right mind would want to borrow $100,000 and have to? It would cost them $16K, and they got to give that $100 back. But what you said is. Once we do this, this no longer is worth $300,000 now. It's worth
$5.
And this is what the appraiser said. And people are saying, how can you turn it into $5? This is what you do.
This is exactly
you
what
do this all day long.
So he's made $100,000 upside on this property.
Well, so this now turns into $500K, but I borrowed $100,000, so I got to pay that back. So then, therefore, my profit is $100,000.
Correct.
Right? Because I upped it $200,000, but I borrowed $100 from Rav, so I want to give back that $100 to Rav, and so I've made a profit of $100,000 minus simply $16,000.
So that's why people do not mind paying 14% interest on their investment properties.
$84K I made.
Because they're making this type of money. It's the cost of doing business. And it's brilliant.
It even gets better. $84K is what I made.
Yep.
My down payment, remember, day one was $60,000. I actually really have no money in this deal, and I'm plus $24,000.
That's right. So you could actually borrow all of this privately, go back down to the bank now after everything's done.
Pay it all back.
Refinance at 80% of $500,000 and get your money back.
Get your money back. And so now I have a triplex.
Yeah.
Now I have a triplex, folks, with no money in the deal, and let's just say, you know, there's the increase in value, the cash flow, it's paying down mortgage, all that kind of stuff. And so really the return is infinite because I have no money in the deal.
Got it. It's amazing. So that's why. It's not because it's a risky situation.
Yeah.
It's about the fact that these guys here are real estate investors.
They're real estate investors, and Bob
Yeah.
just happens to not mind a little perspiration, and that's why he's making a way bigger return than Rav.
Exactly.
Because he doesn't mind this four-letter word called work.
Right.
Rav minds that word. He doesn't want to work, and so guess what?
Passive.
I only get to make
14%. Darn,
on
eh?
my money.
14 a
too
year.
bad for me.
Yeah.
He gets to make an infinite return, but this is how it's a win-win.
I know, it's amazing.
I love it.
Yeah.
So I have a second question then. Let's look at the same scenario, but I didn't lend cash. I have $100,000 in securities, meaning
RSPs.
RESPs, whatever it is, TFSA.
Yeah.
Can we still do the same thing?
That's a great question, and yes, you can. But there is a process. It's a little bit different. It's not too complicated, but
Well, with the first process, I didn't do anything. I just signed.
Yeah, and you deliver a check to the law firm.
Okay, and so with this process,
Yes. So
same
this
thing?
process is you have to have your funds in a plan that will allow for you to self-direct your money to mortgages. So there are very few left in the industry that are allowing to do that. And I'm not here to plug this one company for any reason at all, but it's someone that we're affiliated with, we work with, we have an account with them. For our clients, it's called Olympia Trust.
Olympia Trust, and I use them as well
Yeah.
for my deals, and that's out of Alberta.
Yeah.
So what you really are saying is, let's say I belong to one of the big five banks. The big banks has an arm that allows me to put money in stocks, RSPs, all that kind of stuff.
Right.
So if it was RBC, it's Royal Bank Direct Investing. If it's Scotia, it's
Waterhouse.
McLeod. If
Yes.
it's TD, it's Waterhouse.
Yes.
What you're saying is, I can lend my secured monies, my registered monies.
Correct.
I can lend that out, but it's difficult or even impossible to do it within there. So I've got to be able, they're holding it, so the terminology we use is a custodian.
Yes.
They hold my money?
Yes, and as a matter of fact, they will not allow for you to self-direct your money
Okay, so
to mortgages.
okay, so so impossible, so they will not.
No.
So then what I do is I take that money, and I'm not physically doing this. It's again.
There's an application, and we assist people with it. So we can send a package to the investors, and it gives you great detail
Step
on
by
how to
step.
do it.
Okay.
Connect you with the contact that we have at Olympia that handles our accounts.
Yep.
And it's really just complete a form, send a copy of your statement. Then Olympia handles the process of getting the funds from where they are, from the rescinding institution. Then it ends up in the RSP account within 1 to 3 weeks, depending.
Yeah.
And as soon as the funds are available, then you can contact our company and say, okay, my money's waiting, let's
Okay.
go.
So I have $100,000 at the Schedule A bank. You help me with the paperwork. It now moves. That $100,000 now sits at Olympia. Then Olympia, now I can self-direct it to Bob's Mortgage.
And that's TFSA, RESPs, RSPs,
Lira,
all of it.
Okay.
Right? So you can move any of that stuff over
Okay.
and take advantage of getting those types of returns, which people clearly aren't
So
seeing.
let's go back to now I'm making my 12%.
Yeah.
So I'm lending through my RSP $100,000.
Right.
I make 12 grand at the end of the year.
Yes.
That 12 grand goes back into my RSP tax-free.
Yes.
Goes
Yes.
right back in
It goes
there.
directly back into your plan. So really, it's just allowing for your RSPs to grow.
Well,
so
that's why I did it.
yeah, so you can lend your RSPs. It just always goes back there. Nothing comes directly to you from a income perspective. Personally, it's not going to assist,
but
it's
it didn't anyways, right? My
No.
RSPs, it didn't do that anyways.
Exactly.
So what now? I don't have RSPs, but if I did, I have TFSA. 100 grand goes out. Now I look, and all of a sudden, peekaboo! A year later, it's 112 grand,
Yeah.
and it's tax free.
Yeah.
And so then I can go out. So this is so fascinating. I need to catch my breath by taking a break. Can we do that?
Oh, darn.
Yes.
Okay, I'll let you do that.
We'll take a break here, and then we'll come back and we'll learn lots more from what you're doing. We're talking to my good friend Carmen Campagnaro. Just fascinating stuff of how we can make money in the world of real estate, in the world of mortgages. You don't want to go anywhere. We're coming back with more info. Thanks for watching. Don't forget to come check out the Property Show in Toronto on Saturday, April 25th, where yours truly, Rav Toor, will be teaching you how to make money in real estate. www.thepropertyshow.ca for more details. Hey, it's Rob. You're watching Real Investments. We've been talking to my good friend Carmen Campagnaro about how to make money in this world of real estate using your own money, using other people's money, just the world of mortgages and all that kind of good stuff. Carmen, it's great having you on the show. Just fascinating, you know. We were talking about how I would lend out $100,000 and I would make 12% plus on that in 1 year. Mm-hmm. But the person that I was lending it to was even making more than that, even though it sounds astronomical that they would pay that much in interest, or in costs rather. But we just showed the viewers at home that you can do it through a rehab situation where you kind of buy a dilapidated kind of property and then fix it up.
And that's a small scale.
And that's on a small scale, and then get it reappraised. And you already knew it was going to, because you had an appraiser come in beforehand to say, if you did this, the value would go up,
Correct.
50, 60, 70%. And so there's a lot of people that do that. Whether you want to put some perspiration into it, you can make a lot of money. If you just want to be a passive investor, you can make some great money. Then I asked you about registered funds, where can I take, nobody's making money in their RRSPs and RESPs and TFSAs and all that kind of stuff. Can I make these same returns, 12, 13, 14%, by lending my money out? And the answer was yes.
Yes, absolutely.
We've got to move it to a different custodian. The one that you use is Olympia in Alberta, but it doesn't matter where it is. And then that return goes right back into the security.
Correct. And now the paperwork is just slightly different, because you do have to also complete a form that you're lending your money to an arm's length transaction, because the RSPs and CRA they do not want you lending to yourself.
Okay.
Right?
So that's what you mean, arm's length, that it means to be away from me. Now, what happens if it's obviously my wife would still be wouldn't be considered arm's length, but a relative, or what does it?
Yeah, you know what?
Is that where it gets
something
gray?
It gets gray. It should clearly be not a corporation that you're affiliated to or related to, or a family member.
I never even you put some evil thoughts in my mind. I never even thought about that. So what I could do, what I shouldn't do, is
register a company
register an incorporation. The incorporation buys this triplex. Rav takes his RSPs and lends it right to my triplex. No, we can't do that. So it's got to be a true lending.
You don't want to have trouble, right? Do it the right way. Lend it to someone else. And we have something what we've launched called an RSP exchange program, and it's. We can get into that another time.
I think I already know what it means. I love that.
Oh, yeah. Well,
so Rav lends the money to Bob, and Bob lends the money to Rav.
Yeah, we have actually trademarked the program, and it's
RRSP exchange.
Yes, and it's
program.
And we have this program that we've launched, and if they want to, they can go to our website at profunds.ca. You can contact our office. We can give you all kinds of information. We have all kinds of literature on how it goes. We'll pair up two equal people that can lend each other the money. They're arm's length transactions, and we coordinate the whole thing for you. So if you have $100,000 and I have $100,000, well, are we family? No. So I can lend you my money and you can lend me yours, and we both walk away with $100,000, and we can go buy real estate if that's our objectives.
With our RSPs.
Yes. So that's another whole topic, but. What I wanted to actually talk about as well.
How can you move from that topic so quickly? That's fascinating to me.
I know. Let's just entice these
people.
So
you put money over there. It brings down my income. I don't pay tax on it. It goes into the RSPs. But now I'm stuck because I don't want to make negative returns. I don't want to make 1, 2, 3, 4, 5% returns. So now I take my $100,000. I give it to Carmen.
Yeah.
I make 14%.
Yeah.
Carmen gives it to me. She gets 14%. And that's how we do it.
Well, we fix the rate at a lower amount to lend to one another. So you're paying 5% on your RSP,
oh yeah, of course. That would make more sense.
Yeah. Why do we want to pay 14? So we're still earning 5%.
Yes.
Right? I'm paying you, you paying me. So
but we're using the money that's being lent now.
Yeah. So our RSPs are still in the plan essentially, because you're not taking it out.
Yeah.
But we're able to use that money now and buy whatever we want to buy, income producing properties, and then we can create that. Now, if you want to be like Bob and you're limited and maybe in the cash flow situation because maybe your funds are all tied up in your real estate. Now you have access to that money that's been kind of tucked away there and not having access to it.
Wow, you're so smart.
Yeah, it's great. So
Carmen, what is, I want to talk about two things. You tell me what order you want to go in. I want to talk about this concept of group mortgages now, how a group of, so Rav and his friends come together and lend the money to Bob the developer, Bob the builder.
Yeah,
so Rav
Bob
and his friends come up with, so there's 10 friends. We all put $100,000 in each. So we together give Bob the builder $1 million. So I want to ask you about that, and I want to ask you about, on both these scenarios, on Bob the individual and Bob the builder, private mortgage or group mortgage, what are the risks now? What am I looking for? So we already looked at the returns. We already looked at when we can get it. Depends on the term, 1 year, 2 year, 3 year. We looked at what's the minimum investment amount. It depends, anywhere from $25,000 all the way up.
Yep.
So now what are we looking at? Because you know as much as I do, in any area, capital markets, development, private, you know, this whole lending thing, there are some people out there that are not necessarily on the up and up. Not filled with integrity, unfortunately. And so what are the things, Carmen, I mean, you've never lost a dollar for your investors. What are the things that we're looking for when we get into this this world?
Okay.
I mean, let's just say this is airing in the States. And, you know, Carmen's not necessarily going to be able to help them. But you are going to be able to help them with your knowledge. What are we looking out for?
Yeah, well, it's different with the group mortgages where you have multiple parties, and they're also known as syndicated mortgages in the industry, which it's taking a huge. Everyone's getting into it now, and there's been so much exposure to that. But people do need to be careful of who they deal with in the industry, and maybe check the track record of the companies that you're affiliating yourself with. I'm not saying anything bad about anybody. I know only, you know, intimately our company and how we work and our ethics and the way we do things. And we have an affiliate company called Valor Capital, and we launched that company because of the due diligence required for development projects. It's not such a simple thing like Bob the builder here or Bob the renovator. That's easy. I can put that together really quickly, get an appraisal, and I know we're covered. An appraiser that we rely on, that we're comfortable with. Now, if Bob decided to use his money for something else, well, we still have security on the real estate, but let's say, for example, with this one, 240, 340, we would only be releasing his money to him as work gets complete.
Okay.
So that's very important to people know.
You don't just give it all to Bob.
No.
It's what do you want to do with this development, Bob? And so we give the money, the $1 million that we're giving, we give it incrementally.
So it's critical for us to do our due diligence on these projects. So when we get, and which we have quite a bit of it coming to us right now, we get builders and developers approaching us, and they say, okay, well, we need this type of financing. We need about $1 million, $2 million, $20 million. Can you put together a group of funds? Yes, indeed, we can. However, there is going to be quite a process of due diligence, and our team is extremely thorough. We get third-party reports. We make sure we have appraisals, real appraisals, not just opinions of value from somebody saying, yeah, it's going to be this. And what is the value today as it sits the way it is, not with all the work done to it. So people have to really crawl into this paperwork to see what they're getting. And are they being paid the right returns? For 20 years I've been in this business. The going rate on private money for secondary financing and construction and development is not under 12%. If you're not getting at least 12% on your investment, on a mortgage investment that's a syndicate in a development project, then something's not right. Because right now you could put your money over here with Bob the renovator and get 14%.
And I think one of the things I heard loud and clear was, because again, we have to see, you know, me and my friends, we're giving this guy $1 million. We're giving Bob the builder $1 million. We want to make sure that if something were to happen, we can recoup it. So I want to know how much equity is on that land, how much there is. What I heard you say is, make sure it's today's equity as opposed to a forecasted appraisal of what it's going to look like later, right?
A lot of these bells and whistles and all this, you know, fancy stuff around the deal kind of blinds people with the details and the facts. Where what's really important is to know that the team of people behind it are good people that are going to care about, and it's so hard to find, right, in the business, but people that genuinely want to make sure that everyone's safe. We want to reward our investors. We don't pay a distribution channel of thousands of people out there commissions and then our investors get less of a return. So our model is different. So what we do is we give our investors fixed returns on these development projects if we get involved in them. So they get anywhere between 12 to 16, 17, 18% on their money on a development project.
Yeah.
And it's not because it's related to risk, it's because we're sharing with them in that. Now, we don't pay out 20% in commissions to people to bring us these investors. These investors are our own. We have our own group of people, so we don't have to have that extra cost. So it saves the builder, because there's not a lot of upfront costs at the beginning of the project.
Well, that's the biggest concern, is that here I'm lending my money to somebody. I don't want him to be so tight financially if he has to pay all these other fees.
And then he's left with it. Our company's involved.
Yes, that's right.
We participate in every one of the projects. We handle the money. And if they don't want us to handle the money, then we're not interested. Because so many things could go sideways that way.
Well, because you're introducing me, so it's kind of like you're representing Rav and his friends in this deal. You want to be able to spearhead this in a sense. I mean, even though you're the liaison person that introduced us, it's nice to know that Carmen's still invested, because, I mean, let's face it, your business is repeat and referral business, right? I mean, as much as we have our name out there, it just takes a deal for everything to go sour, and so we got to make sure that we're doing it the right way. So,
and if it does go sour, and I will mention this, if something does happen to the builder, at least then we have a contract with that builder to say, hey, we can take over, we can control, we'll bring money in. Even if we don't make money, we can just exit our investors. That's our goal. Right? So the whole thing is, it's not about, getting rich at the beginning of the deal. We want to see it go right to the end.
Sure. So let me kind of change gears here a little bit. Access to this money. So Rav wants to lend Bob, the builder, or Bob, the individual, $100,000. Help me even through, I mean, I shouldn't be surprised. I'm just so surprised that people don't know just the simplicity of being able to pull money out of my own principal residence. So walk me through that. So typical scenario, we're in the GTA, average home price, what? 400, 500?
500, 600, 700.
Okay,
prices like this.
Yeah, so let's call it $500,000.
Yeah.
The bank, traditionally, Carmen wants to see us, and now we can do it other ways as well. So it doesn't mean that if you're watching this and you don't have that, we still don't put in a call. But generally speaking, you want us to see about 20% of equity in there, meaning if I have a $500,000 mortgage, property, you want to see that I have at least $100,000 in there before we start to talk, generally speaking.
Yeah, so you can get maximum 80% of the value of your property.
Which is the $400,000 on the $500,000
And that's
property.
the max institutions are going to give you.
Okay,
now,
so let's say I have half of it. So let's say I have a $500,000 house, and I have a $250,000 mortgage and $250,000 equity.
Available.
I want to take available. We're going to go to break in 1 minute. So tell me in 1 minute, how do I get that 100 grand? 100 grand in? How do I get 100 grand in?
We can refinance it. I don't recommend lines of credit. We can get people 2.05% interest on a variable rate right now, which I highly recommend. Or we can get you 2.6 for a 5-year fix.
Okay,
we'll take care of it all.
So I apologize, because I'm going to make your phone ring off the hook.
Great.
Okay, so I want everyone out there to call Carmen to say, why not a line of credit as opposed to a new mortgage? We're talking to my good friend Carmen Campagnaro. You're watching Real Investments. We'll come back with just her closing thoughts in a few minutes. You don't want to go anywhere. We'll be right back in a minute. Thanks for watching. If you have any questions pertaining to this show, or there's a topic that you would like covered, please visit www.rogerstv.com. Hey, it's Rav. Welcome back to Real Investments. We've been talking to Carmen about how to make money in the world of mortgages, borrowing, lending, all that kind of good stuff. If you missed the show, please go to rogerstv.com and see where the repeats are, because it's been a dazzy, a doozle, a great show, phenomenal, all that kind of stuff. But Carmen, just your kind of final thoughts, here to the viewers at home on this kind of boring lending, but both as investors.
Yeah, I would say don't let fear cripple you on this type of an investment vehicle. If you're not informed, contact us and we can provide you with the information. And we have multiple projects we just launched, actually 3 of them. So now is a great opportunity to contact the office, see the type of material we send, the due diligence materials you'll receive, and the service.
And that's from a lender's perspective. If I want passive income, I want to put my money out there, cash or registered money.
Correct.
I put it out there. And then what about from a borrower, from Bob?
Yeah,
There's lots of Bobs out there.
Yeah, don't think that it's not good enough to be approved. You know, every deal is worth looking at, and there must be a way to do it. So if you have anything that you're looking at financing, be it a $50,000 mortgage or a $50 million mortgage, we're able to help you.
So how does that work? So Bob's out there and he's got a project. He contacts your office and then actually kind of submits the deal and gives the numbers.
Yep.
And then if you like it, then you give it to your RAV type investors to be able to see.
So one of our staff, we've got a team of people. So it won't necessarily be me on the phone,
funds,
but somebody in our company will be dealing with it. They've all been seriously trained in the way that we do business, and they can assess a deal immediately and get back to you. Like even a phone call, an explanation of what it is in a matter of 10 minutes, we'll know whether or not we could do it or not.
Perfect.
Yeah.
Listen, did I tell you I love you being on the show?
Oh, it's great. I love it too. I want to be here every day.
Well, you're going to come back soon,
right? Yes.
That's great.
It's
Thank
awesome.
you so much.
Thank you.
We've been talking to my good friend, Miss Carmen Campagnaro, about how to make money in the world of real estate. On behalf of Rogers TV and myself, Rav Toor, we'll see you same place next week, same time. Honey, I love you. I'll be home soon. Ciao.